Coinbase just tore down a wall. From today, UK users can trade US equities directly on the platform. For the first time, your crypto exchange is also your stockbroker. This is not a minor feature tweak, it signals the final blurring of the line between digital assets and traditional securities. While Bitcoin hovers just beneath $65,000, the market is absorbing a much bigger narrative. Regulated crypto infrastructure is now wrapping itself around the world's largest equity market. The timing is deliberate. With the SEC hosting a public roundtable on July 23 to explore 24/7 stock trading, just like crypto, Coinbase is positioning itself as the venue for a new generation of investors who refuse to switch apps or wait for the closing bell. The regulatory winds are shifting. Wall Street's 234-year-old closing bell got a meeting date, as the SEC formally considers round-the-clock equities trading. Coinbase, already armed with UK crypto licenses, is betting that the gap between two asset classes will vanish. And the numbers back it up. Spot Bitcoin ETFs in the US soaked up about $181 million on Tuesday alone. Yet that torrent of institutional cash has not translated into a clean breakout above 65,000. ARP Digital's Yusuf Fakhro described the participation as stalled, meaning fresh retail money is not chasing the move. Without that second wave, Bitcoin stays range-bound, and the equity listing becomes the bigger story. Every trader is watching the same number, $65,000. Bitcoin has tested this resistance 3 times in the past fortnight and failed to cling to it. The latest attempt came after positive inflation data on August 5, but a Coldcard hardware wallet vulnerability sapped confidence, reminding the market that crypto's infrastructure still carries technical risk. ETF outflows on the back of that news pulled the price back to 63,000 briefly. The order books show heavy sell walls stacked between $65,000 and $67,000, meaning even a short-term break higher will need massive spot demand. Until that clears, bulls are stuck arguing about momentum while gold and US equities sit near all-time highs, quietly stealing the safe haven narrative. Look beyond the daily candle. The real play here is convergence. When UK residents can buy Tesla shares with the same app they use to stack Satoshis, the psychological barrier between crypto and equities crumbles. That opens the door for basket products, tokenized stocks, and hybrid portfolios that were science fiction a year ago. Coinbase move pressures rival exchanges to follow, and regulators in London and Washington now have to write rules for a market that no longer fits inside their old silos. For the average viewer, this means lower fees, simpler interfaces, and the end of the old argument that crypto is somehow separate from real-world finance. It is now just another asset class in the same shopping cart. So where does this leave us on the 6th of August, 2026? Bitcoin needs a daily close above $65,000 to flip the script. Watch the ETF flow data tomorrow morning. A second day of 9-figure inflows would show institutional conviction overriding the retail hesitation. Meanwhile, watch Coinbase user growth figures from the UK. If retail equity trading volumes spike early, it proves the demand for unified platforms is real, not just a press release. The most important takeaway is this: the infrastructure war is over, and convergence won. Whether Bitcoin breaks up or down this week, the financial world you knew a year ago is gone.